news out on your front. And just looking at your results for the year ended the 30th of June 2010, you had revenue up 12%, EBITDA up some 31%, an impressive set of results. Do you think you can keep up this record once you unbundle from the Mvela Group?
Hello. Now listen, we already try very hard to do so. I believe the past year was a great experience for us in terms of the team that we put together to take the business forward. Yes, I believe it is sustainable.
Mvelaserve is not a well-recognized brand out there. Perhaps you can give me a little more color around the underlying brands. What are we really talking about when we talk Mvelaserve?
Well, Mvelaserve, possibly right, it's not well known in the markets, but we have a bunch of good business in our stable. We have a TFMC, which is a total facility company. In a nutshell, they specialized in total facilities management. They outsource service to clients. We allow the clients to look after the core business, allowing us to look after their assets. On the other side, you've got Proteacoin Security, a well-known brand in the market. They specialize on guards, cash in transit, in the technical installations of equipment. They probably at the moment the top brand in South Africa in terms of security. We've got Royalserve in our stable, which is the catering and cleaning divisions of the group.
I note that you have said that you won't be needing to raise any capital with this listing. Does that mean that you've got adequate capital to beef up your scale at this point?
Yes, we do. I mean, understanding that the intention announced by Yolanda Kuber from Mvela Group was to the market a year ago was to unbundle the group. The strategy was to list Mvelaserve, and yes, we're not there to raise cash. We got enough cash flow in our capital in our account, and we're okay.
Nick, what do you think about this story? If it does go ahead with the listing, it will be the 8th company to list on the JSE All Share this year, following Life Healthcare Group, which was recently obviously unbundled as well from Mvela Group Limited.
Well, you're catching me a little bit off guard here. Obviously, I've been following the stories. It's certainly there. And I think it's something that Mvela Group's been wanting to do is actually unbundle all their major assets and list those separately to unlock value for the shareholders. So certainly a nice move to see that they are continuing with that. But other than that, it's not a company that we look at extensively.
What about the competitive space? When we talk about beefing up your scale, does that mean that you're looking to go head-to-head with Bidvest ultimately?
Listen, I wouldn't like to go into any specific competitor out there. There's lots of competition in our market, which obviously is good for us and for the consumer, for the client. I believe that we're very focused at what we're doing. We got a good portfolio of clients, and without any doubt, we'll be growing with our clients, and we will be penetrating the market going forward as well on new clients.
Could we see a potential, another Royal Bafokeng story where the company announces its intention to list and then at the last minute we have a company coming through and making an aggressive bid? Could we see a similar story happening here on Mvelaserve?
Possibly that could happen. I mean, that will be a group decision, Mvela Group. My mandate at the moment is to carry on with the listing, and that's what I'm focusing on, to take the company forward and list.
And the timing of that listing, George, just to the end of this year, you think you're going to get it done?
We intend to list before the end of the year, but I'm sure in the near future we'll give another announcement to the market.
George, thank you very much for your time. George Ferreira is the CEO of Mvelaserve. Coming back to the markets, and we need to touch on what happened today in both Europe and in the UK with the Bank of England and the ECB keeping rates on hold and no further quantitative easing out of either of those territories at this stage. Where is the world going? The million-dollar question. And where's your crystal ball? I haven't asked you that question for some time.
No, you haven't. No, look, I mean, what's really important to say is that the market's reached an intraday high that we haven't seen this year. So we're at a 12-month high at the moment. And we actually saw the turnaround happen in late afternoon trade. When I left the office, the markets were nicely up. We've seen some massive gains on resources. So we've seen a bit of a sector rotation out of financials and industrials into resources. That's pushed the market up to, I think the intraday high was 29,800. So we're almost getting to the 30,000 point psychological level. Boom, all of a sudden about 3:30 American markets opened, some foreign interaction with our markets, and we saw some nice sell-offs. And in fact, the ones that are down the most are the resources, Harmony, Kumba, Anglo-American, and so on. So that was interesting, and it was bound to happen in our view. I mean, we feel that the markets are a little bit overstretched in the short term. Obviously, the resource shares...
Across the board, do you feel that the markets are overstretched across the board? Well, financials, industrials, and resources?
The only one that's not stretched, and that's truth, in my opinion, would be the resources. They really have not increased to the levels that the markets were at when they were at 29,000 points. So put into perspective, the financial index is back where the markets were when they had 29,000 points. The industrial index is back to where the markets were when they had 29,000 points. The resource index is still a full 5,000 points below, or 10% below what it was at. So there's that whole big gap that still has to be made up, that could still possibly be made up and still possibly move these markets higher if the resource prices remain heavy like they are. And copper, you can see, is still quite high at the moment. Iron ore is through the roof. Coal is up quite a lot. It's just obviously the gold that we're so cognizant about has, shifted quite drastically.
And the anomaly is, of course, that, as you're saying, commodity prices are at new record highs on the gold price.
Correct.
Platinum was above $1,700 an ounce, and then copper, $8,215
So we're back to
a
pre-crisis
ton.
levels. So, is everything forgiven and forgotten? Are we seeing the world returning to the growth trajectories that we expect?
The fact that the resources haven't played catch up to those commodity prices, does that mean that they don't trust what is happening on commodity prices?
I think they're playing catch up right now. I mean, it's just amazing to see Sasfin, for example. Oil price now $83. Sasfin was, goodness, just 300 Rand a couple of days ago. It's now, ticked up to 330. It probably pulled back a little bit, today at the moment.
Anglo-American, I'm trying to find right here. What's happening
Anglo-American,
on Anglos? It was 300 Rand yesterday.
Yeah, 300 Rand, 305 Rand's providing a little bit of resistance
292
currently.
today, closing at.
So it came all the way back again. So what we're seeing at the moment is we're just seeing a little bit of profit taking. It's not just in South Africa, it's overseas. It's okay, it happens. I mean, like I say, we've seen one of the biggest gains in US markets since 1939 in the month of September.
We were up 8% on the Dow.
It's okay to see a bit of profit. It doesn't mean the world's going to, double dip recession. I mean, that hasn't even been used for the last month. It's just this crazy market, this push and pull factor of statistics that come out, what the gold price is doing, what the platinum price is doing. I think we need to really step back and have a look at the broader picture. And what we have from a South African perspective is if we've seen some massive increases in the financial shares and we've seen some massive increases in the retail shares. That's okay. Profit is eventually going to be taken. The only index that has really not run lately has actually been the resource index. And with resources prices where they are, regardless of the Rand for the moment, I know the Rand is strong, we're certainly seeing some value creeping in there, and that's what we've seen the last couple of days. Literally the last 4 days, we've seen some massive increases again, slightly getting ahead of itself, some profit taking. Where do I see things going forward? The markets have been very resilient. The current increase that we've seen in September is incredibly important. I think it's well supported. There's a lot of government intervention. I know there's not so much quantitative easing right now, but you've just seen from the Bank of Japan the inflow of money that's going through from the East. The governments around the world are not going to allow the economy to stumble. Even if they're going to use artificial measures till kingdom come, it's going to happen. That's going to influence the stock exchange, specifically because so much capital is being pumped into world markets. That's going to flow into the capital markets, and we're going to see the stock exchange continue to rally, in my view.
But we're being artificially boosted in the developed world.
And that's the reality.
How can that continue? You can't just put a printing press in your kitchen.
And
continue for the rest of your life making money. That's ultimately what governments
That's exactly
are
what's happening. Our grandchildren are going to pay for this.
Our grandchildren are going to pay
Correct.
back. Just looking at all that money flowing into emerging markets, is there a case for a pullback on the local front? You say markets are looking pretty toppish here.
A little bit of, obviously most of the money's been flowing into our bond market, all right? So it obviously depends on where we see interest rates going forward, and with the inflation data, we don't expect interest rates to go back that much, maybe another 0.5% if we're lucky for this year. Then that's it, quite frankly. The differential is still massive. America in no way is going to be increasing the interest rates at all. The European Union, the ECB and BOE today also, it's completely flat at 1% to 0%. Bank of Japan decreased the interest rates. So emerging markets are one of the few areas on planet Earth that you actually have slightly inflated interest rates compared to the world. As long as that remains, you're going to see massive inflows of capital into those countries.
Perhaps getting to the question then, if portfolio managers out there are underweight South African equities, are they not going to get another opportunity to get in? Perhaps they should buy in here because structurally we've seen so many changes in the world.
At the moment. I mean, like I said, there's money on the sidelines. It's been there. It hasn't changed. People are getting worried. Now the market's back at almost 30,000 points. Goodness, what do we do? We're going to see 33,000 points and then we're back to where we started. I certainly don't think it's time to rush into the markets now, but I would certainly be buying the dips. I don't believe we're going to see a double dip or another recession. I certainly think we're going to see a comfortable recovery on our stocks, even if it is based on artificiality.